Adventures in New York City with JC. That would be a fun show. We have a good time.
Why? Because we're missing good stuff.
You know how I got my wife? In hindsight, I am full of useless knowledge of New York City, like particularly like with the West Village and Soho, like just random useless knowledge. And when I first met my wife, I would like take her down there and we'd go bar hopping, and I was just full of fun facts everywhere we went, and that worked.
You're not wrong. I love going to Fidei with JC because he'll give you like a full history of the neighborhood as you're walking.
Are you kidding me? I'll show you the bullets when JP Morgan's like horse and buggy, like I show you where the wall actually was.
We've all seen that.
I'm just saying, like I used, how many like New York City documentaries? I could be a tour guide in New York City and be one of the greatest tour guides in the history of New York City. I wanted to make no money, but you know what I mean?
It's funny you mentioned that. I was telling Kenny Glick last night. I had a very brief foray into being in New York City, like one of those like downtown tour guys.
I knew that.
Yeah, no, because one summer in college I was interning, but I didn't have a job, so I was making no money. And my dad was like, every day, man, I see these people, these guys, right by the Statue of Liberty ferry, like where that loading area is, and there's all these tour guides there. They're doing these super like amateur tour guides. You should do that. And so I tried it for like one day. It was like an epic fail, worst day of my life. But anyway,
all those years that I thought that all this useless knowledge was useless, got me married to a great gal.
There we go. All right, let's start the show. Can we start the show?
I think she likes Strazza more than me. She loves Strazza.
Okay, I'm starting the show. Here we go. We just got a hot CPI number if anybody's interested in such things. JC asked before we hopped on, are Dow futures really up 200 points? Am I seeing that right? You are seeing that right, sir.
300 by my count.
Oh, is it 300 now?
Dow's up 300, man.
200. Yeah, close enough.
What 50 handles on the S&P 500. They call them handles. They're called love handles on the S&P 500, Spencer.
I was aware. Okay, so CPI, month over month, 0.0 versus 0.1 expectation.
And this is what? This is what? GDP?
This is inflation, man. CPI.
Yes.
Year over year, 3.2 versus a 3.3% estimate. Core. Wow, look at that core number, 0.2%. So core is obviously without food, without energy, 0.2% versus a 0.3 estimate, a month over month, year over year, 4%. So basically, by every measure of CPI, year over year, month over month, core, non-core, all coming in below expectations. It's a hot number, man.
I'm more of a hardcore kind of guy, What is it, softcore?
So reading through a couple notes here that are being circulated on desks this morning. Yeah, they all came in 10 basis points below.
And then why do you think that the market cares? Like, why is the Dow up 300 points on this CPI thing?
Well, come on, because this is how they decide whether or not rates are going to maybe get hiked again. And when that's over with, how soon and how much they'll be cut. So note that's going around right now. Traders are erasing their view that the Fed could raise rates any further and adding aggressively to bets on rate cuts in 2024. So sounds like there's some movement in Fed fund futures here this morning.
What about the NASDAQ 100 up 1.6% at 8:30 a.m.?
Well, you're making my point for me, right?
I'm really not sure what your point is. That's why I'm asking so many questions.
Of rate hikes or expectations of lower interest rates in the future and lower interest rates sooner, good for tech stocks. Seeing the reaction right now.
Got it. Is that why the new 52-week lows list peaked 6 weeks ago?
Well, I think they've been pricing in rate cuts for a while now, right? Based on Fed fund futures. I don't know whether or not or how right they've been, but that's been the expectation.
Why don't we do a little state of the markets? I have one thing I want to say though. So I was with some Fairfield kids last night, like actual kids, like they just graduated from Fairfield University a few years ago. Strazza and I both went to school there many, many years ago. I've got my 20-year reunion next year. That's how old we are. We're so old. We were telling them about other reunions we've had over the years. Like that's how old we are that we're talking about reunions because they haven't had any, right? Because they're actually children. They just graduated. So anyway, you know what my advice was, Strazza? My advice to them, because they were asking a lot of questions, which I love, and I was like, do right by people, right? If you say you're going to do something, do it. Like if you don't know if you can actually do something, tell them that you'll try your best if you actually are, right? And and then over deliver constantly, and then just do right by people. And like literally, I swear to God, maybe 5 minutes later, somebody walks in. I'm not going to mention any names. Somebody walks in and it's like, JC, everybody was just talking about you. You have a good reputation. Like literally, I'm like, what did I just say? What did I just say? I mean, so the lesson has nothing to do about me. The lesson is just be a nice person and do right by people. Like it's not that hard.
I think that's always sage advice, right? Because especially when you're getting out of school, you think you're entering this like giant workforce, and you find out in time that actually the world that you're kind of living in or operating from a career standpoint in is a lot smaller than you thought, right?
Spencer always jokes like they're like, oh GC, there's always like this like history that I don't know about. I'm like, Spencer, like this world existed before you got here, right? Like there was this whole we used to do this a long time before you came,
No doubt.
And those relationships come back too.
Oh yeah.
Like, I'll hear from people I haven't heard 5-10 years, and that's just the way it works. So totally.
All right, let's talk about some markets here.
Can we hit the bumper?
I think we have some charts. I hope we have some charts.
Hit the bumper.
Yeah, we got it. I got it.
Well, here we are, live from New York City. In a similar way, Strazza, that the Dow Jones Industrial Average is the world's most important index, New York City is the world's most important city. Can we agree on that one?
Tell people why. I don't disagree.
On the way back from a football game the other day, I was in the car with my dad and a couple of people, and I was just explaining. I was like, I had an unfair advantage to my friends who lived in Miami and never left Miami because of where I was. I went to college in Fairfield, Connecticut, Fairfield County. Like literally, where all the biggest hedge funds on planet Earth are. And then you live in New York City, and I mean, it's just where things happen. Is where you meet people. I mean, it really is an unfair advantage. So here we are in New York City. We were last night, all kinds of shenanigans taking place all over downtown. And they were having dinner. All I wanted was pizza. It was just like a very innocent, like, hey, who wants pizza? That's what I want. If you want to come, we're going to Lombardi's, right? So then there was like this other dinner, right? And they were like, oh, are you going to JC's dinner? Like, oh, did you get invited to JC's dinner? Like, it was like this whole thing. There was no dinner. I just wanted pizza.
People like to eat with you. You should be flattered.
It was actually hilarious. So anyway, New York City, no joke. Okay, so Strazza, the Dow is up 320 points. The NASDAQ 100 is up 1.6% now, pre-market. By the way, gold is up, silver's up 1.5%, copper's up almost 1%, crude oil, everything's up, except the United States dollar, right? So why don't you tell me a little bit about what happened yesterday? I was business meetings with business papers, a lot of business papers. Why don't you tell me what happened yesterday? What did I miss? I was watching the market kind of from afar. And it was kind of like a nothing burger. Dead all day. Nothing really happening.
No, it was an indecision day. A lot of inside candles, mixed action. A lot of times when you have a big economic data event or Fed event or earnings for an individual stock, you just kind of get like a breather into that day. And it seems like, prices or buyers and sellers were waiting on this release that we just got here at 8:30 and talked about at the top of the show.
Got it. So that was part of the indecision yesterday. People waiting for this GDP number or whatever because it was so important.
CPI, right? So you have something like ARK up 3.5% pre-market, definitely getting a strong reaction. What is always interesting to see is when you get these pre-market moves, is making sure if you're bullish that they don't get faded throughout the day, right? I like a red open and a green reversal, when you get the green open, sometimes
this is a bond move, right? So,
Yes.
To Strazza's point, my understanding is that the market, according to Strazza, is now less worried about higher interest rates, looking more towards lower interest rates, right?
Sooner, right?
The bond market is making a big move.
Yeah.
This is a real market. Like, this isn't like cryptocurrencies that is like this tiny little nothing burger, right?
Yeah, I got something on that.
This is the bond market.
It is.
So what are we looking at? 30-year futures up 1.5%-ish, 1.5%. That's a monster move in the bond market. So that's going to trickle down into other asset classes, particularly equities. And because bonds and stocks have such a high positive correlation, which has been in this environment, because my entire career was actually the exact opposite. The US Treasury bond market was a safe haven. So for most of my career, if the Dow's up 300 points, bonds are probably getting killed, right? Because the market liked inflation. The market would go up with higher rates. Lower rates was right, evidence of selling pressure in the equities market. So you're seeing the bond market ripping, and stocks are acting accordingly. And when you go further out on the duration curve, right? Strazza's talking about ARC up, you said 3%?
3.5%, yeah.
3.5%. That makes perfect sense in an environment that bonds are freaking ripping, right?
So let's throw up this chart of the 10-year quick. Just drop.
You like the artwork at the hotel room? Not bad, right?
Where you staying? I'm kidding.
I'm in Friday.
Okay. I will say about the city, there's no better neighborhood to get to hang out in than the financial district.
Well, I don't know about that. I mean, it's nice. I'd rather be in West Village. They don't have hotels. They don't have hotels there.
Quiet. You can walk around. The weekends are great. It's like empty there. You feel like you're not even in New York.
Yeah, it's good. It's good bang for your buck. My sister lived here for a few years. It's a good. I like living here for sure. I mean,
water right there. Some nice parks.
Yeah.
All right. So, is this a big deal, or is the bigger level the little base breakout zone?
I think it's been a big deal. I think the fact that rates made new highs and the dollar didn't. Remember that? I thought that was a big tell. I thought the stress. You know me. I'm more of like of a horizontal trend line kind of guy than a diagonal. I'm more interested in the fact that we're making lower lows and lower highs than we are breaking a diagonal trend line, right? An arbitrary, right? But yeah, those fall highs are the big level. That's the big one. Yeah.
And then, we can show a similar view, even weaker kind of structural picture, which would be the dollar. Do we have a chart of that? Because dollar's making fresh 2-month lows here today. Second, outsized move to the downside since last week. Well, I guess November 3rd, right? That Friday. And now again here today, really big down, really candles from the US dollar index. If we're back in that box, I think that's kind of what you've been saying. It's a need, not a want for this, end of year and into 2024 rally.
Man, you got a 104 handle on this dollar. Let's see, where are we right now? We got a 104 handle on the dollar index. Well, there you go. Yeah. I was literally saying, if you get a 104 handle on the dollar index, like, you're getting a face ripper. And well, without even looking, I said that. Here we are with a 104 handle, and what do you know? You're getting a face ripper in the equities market. So that makes perfect sense. How are small caps doing this morning? Small caps are actually up almost fucking 3%. So yeah, I mean, you're getting the face ripper, and the dollar's selling off. Bonds are ripping. I mean, there's your unwind. And by the way, can you actually throw up the seasonality chart on small caps? This is the January effect. Are you guys familiar with the January effect? This is old school. You kids don't know about this yet. You'll understand when you're older. Why don't you throw up slide 2, Spencer? So Jeff Hirsch, obviously friend of the show, friend of ours, better golfer than Strazza. He does great work. And then, of course, This is from what? This is from Jay, right? This is who works over at Sentiment Trader, right? Jay Capel. The two of them kind of collaboed for this one, but you could really see this is small caps versus large caps. This is the seasonality. So this is what's called the January effect, and the January effect really gets going in November these days. In the old days, it was called the January effect for a reason, and it was because. So this is the effect of small caps outperforming large caps at the beginning of the year because fund managers were more inclined to or more open-minded to position themselves in more speculative small caps at the beginning of the year because they had the rest of the year to make up for it in case that was a bad move, right? And then as you see into the 90s and 2000s, like that seasonality starts getting closer to December, and now it's in November. You could really see sort of that shift where the January effect kind of moves forward. What the reason is, those are conversations for bars at midnight in the East Village, right? It doesn't actually matter why. It's just what it is. So anyway, my point is it would be perfectly normal for small caps to start to outperform large caps now, right? Like over the last few weeks, that would be perfectly normal. In fact, it would actually be odd if small caps did not start to outperform, right? So that's where we are. So the fact that S&Ps are up 50 handles and Russell 2000's up 2.5%, small caps are outperforming. Perfectly normal, right?
Yeah, but to be fair, this is one day, and there's zero technical evidence that would support a thesis that small caps are ready to start outperforming.
Yeah, other than the fact that historically small caps, almost always start to outperform right now. Other than that evidence, right?
Okay, so seasonality is great, and boy, you've been talking about it a lot lately. Got to ask you, does it mean anything to you at all if price is not confirming your seasonal information?
Yes, that's actually.
You go buy small caps right now with IWM SPY looking like this.
I think you can buy. I think you can buy small caps against those lows. Yeah, of course. If we're above 170, you can own IWM all day. Yeah, of course. Why not?
No, I think you should look at these ratios.
I literally am looking at the ratio right now. I know you think I'm looking at you and you're pretty sure, but I'm not. I'm actually looking at the ratio. I'm staring at it.
This is a quarter zip. It's not a shirt. So new record lows across the board in any small versus large, micro versus mega, anything.
Yeah.
Any one of those ratios.
Yeah.
Record lows. These things are literally collapsing.
Yeah.
Favoring. So this is the inverse of what I'm talking about. Favoring large, favoring megas, favoring the stocks that simply have been working. And I'll tell you another thing that we know about this time of year. Fund managers do. It's not just small caps. They chase performance. They chase leadership into year end, right? That's another thing that you talk about at the bars in East Village at 1 o'clock in the morning, right? Why? Because they want to deliver their statements at the end of the year and show their clients or customers that they were in the best stocks. Regardless of whether they were really in them all year, they want to be in them in December or at the end of statement end, the end of Q4, right? So they're going to chase Microsoft, Apple, Nvidia, all the best names that have been working, and you're going to see them keep working and work more and just keep ripping into year end. And that's exactly what we've seen the last 2 weeks. Is it not?
And if small caps were so terrible, particularly relative to large caps, then how come you're not seeing any oversold conditions in the small caps versus large cap ratios there, Strazza, Mr. Quarter Zip?
These ratios have been living in oversold territory all year. You're saying that just on this recent surge to the downside, we don't have an oversold yet? Fine.
We do not.
Again,
we do not.
Momentum divergences like seasonality mean nothing if price is not confirming them.
That's right. I'm asking questions, my friend.
We'll wait and see, I guess is my point. But I think there are bigger overriding or larger and more powerful forces at work than a small cap chase.
Listen,
I think you're getting the opposite.
Strazza, let me ask you this.
You're getting the mega cap
chase. Let me ask you this.
Yeah.
When we're drinking the Chateauneuf du Pape on Christmas Eve, roasting pigs.
Yeah.
And the S&P 500 is at a new all-time high.
Mm-hmm.
Right?
I'm going to say I told you.
Hold on. And we're flexing our dinners and how great they are to each other. between now and then, in that scenario where the S&P 500 is at an all-time high on Christmas Eve, have small caps outperformed from now to then, or have they underperformed?
I mean, see, you look at a trend like this that's so extended in one direction, and you give me a time frame, of a month and a half. Yeah, I think that's a fair bet to make that you get some sort of rebound in this ratio over the very short term, just because of how extended it is. But I would think that a more sustainable strategy still would remain sticking with the winners. Why overcomplicate it?
When I'm drinking my Chateau Neuf du Pape, roasting the pig, and the S&P 500 is making new all-time highs on Christmas Eve, and we look back to this moment on November the 14th, have small caps outperform or underperform? It's a very simple question.
Overweighting small caps right now for a sustained period of time is a very cute thing to do, is all I'm saying, right? There's not much evidence there. Sure, it makes sense. You would think you finally get buy-in and participation from these stocks. If and when it happens, yes, we would expect them to outperform. But just look at this trend all year. Literally, all year. I'm looking at micros versus megas, like not trending lower, collapsing lower. So it's, yeah, all right.
This actually feels like this feels like an idea that I would have, but to Strazza's point, why would you do it? Like, why though?
I love it.
Like, what's the reason? Like, besides
my
because
point, Spencer's like some form of tradable low. Give me some sort of like technical.
Are you shorting small caps here?
Hell no.
Right.
No, that's a totally different question.
No further questions, Your Honor.
No. I'm
agreeing with you without agreeing with you. I'm saying like what you're saying is logical. I get it. It makes sense. But show me something from price that suggests, okay, maybe these things are ready to outperform even over just a month or two, right?
Why don't you let her dance? Let her dance, and then we'll talk about it.
I think it's still going lower today.
Like the market hasn't even opened yet. And we're sitting here talking about Christmas Eve. You know what I'm saying? Let her dance. Let her dance.
We got any news to talk about?
Yeah, the news is the dollar's getting the shit kicked out of it. That's the news. Does anything else matter?
It is big news.
Does anything else matter? You want to know something funny? So I get dropped off in the car in West Village, and I go traffic, and I was like 10 minutes from where I needed to go. I was like, you know what? Get me out of here. I'll walk, right? I like walking here. I swear within a block of me walking, I hear, and then I got hired by a guy named Sam Zell, right? Two guys walking down the street within a block. And then like a block later, it's like, and then our customer acquisition costs, or da-da-da-da. I'm like, New York, like this was like, I had just gotten into the city. The first block, the guy's talking about how Sam Zell hired him. And then a block later, like, it was just like, shit gets done.
Are you surprised?
No, it's just funny, like it's just.
Hey, how cute is this? JC misses the city. He gets so giddy when he goes. Look at the smile on his face. You should go more. Want me to talk to Morgan? We gotta send you to the city more. She won't miss you.
I'm good. It's just it's fun to be like, I remember when I moved to California, right? I moved to California, and then like my first trip back to the city after moving to California, like I go through the tunnel, and I'm in the city, and then like, one guy's fuck you, and I was like, oh yeah, good to be.
That's
I was like, what a great town.
Yes, sure. That's it. That's
so
it,
good.
man.
So good.
That's it. We do have some news, Strazza. I guess we can cover one thing before we bring on our guest today. Let's cover Home Depot here. We had some Home Depot earnings. Very interesting numbers. Some a lot of reports, frankly, are just not interesting. Some reports are very interesting for what they say. Right. This one is definitely very interesting for what they said. So the numbers from last quarter were fine. They beat on the sales. They beat on the earnings, whatever. But their comps, they're basically their same store sales down 3% year over year, and they are forecasting continued declines in sales growth. They are forecasting a 3 to 4% year over year decline in sales growth for the year, and likewise an EPS decline as well. So whatever. I mean, My spending at Home Depot is at like an all-time high right now, but apparently I'm the exception, not the rule, because Home Depot is just seeing a dramatic decline in sales year over year for the quarter and for the year.
3%. Okay. Dramatic.
I mean,
Mr. Dramatic. Listen, at a certain point, right, this had to happen. Because think about it. These guys were growing unlike anything through the pandemic.
It was all pulled forward. It was all
pull those projects forward. Those are big ticket items, right? It was like a DIY revolution during COVID. Everybody's just staying home doing like projects around the house. At a certain point, you do everything, right? And then you've got these monster growth numbers from the past couple of years that are now comps that are going to be tough to beat. So I just think this is such a solid business. Let them breathe. They're not going to grow at 30% every year forever. This massive company. So.
Yeah, I mean a lot. Yeah, yes, a lot of this stuff got pulled forward. I guess the good news is, unlike some other industries where things got pulled forward, sales haven't exactly fallen off a cliff. Like you said, 3% is not the end of the world, right? Maybe I was being a little over dramatic there, but I you're right. They are tough comps, right? The last 2.5 years, very tough comps, right?
And you're seeing it in the market reaction, right? Kind of overlooking it. Stocks up 2.5%. Look,
you're right. You're absolutely right.
9% dividend from a company that still growing and has as solid fundamentals as Home Depot. That's why people love this stock. Getting close to 3% from this company. And look at the stock chart. I don't know. We were doing chart requests live last week. I could just toot my own horn here a bit. And pulled up a chart of Parker Hannifin, PH, and we zoomed all the way out. And I looked at the chart, and I looked at the dividend yield. It was like 1.3, or maybe 1.5%. And I looked back to like 1970s price history. It was just secular leader. And I said, Pat, I have a feeling this is a dividend aristocrat, just by what the chart looked like and the level of yield that they're paying. Went, checked the list. Lo and behold, Parker Hannifin was a dividend aristocrat. My point is,
isn't that 1.4% like part of like your sweet spot, you say?
That's my point, right? So I knew, because the yield was in the sweet spot. That's what aristocrats tend to pay. And the chart just zoomed out, was just steady stair step higher for 50 years. So this is an aristocrat. But the point is that they have charts that look a certain way, these companies, right? Because it's such a good quality filter. If you can consistently grow, and not just sustain, but grow your dividend, for 25 years, through recessions, through downturns, through pandemics, you're obviously doing something right. These charts tend to just, steadily grind higher over time, and Home Depot has that look to it.
What changed in 2010 for this business? Something must have changed after a literal lost decade there. They really turned it around somehow. I doubt we know the answer. I'm just wondering, asking out loud here.
Yeah, I don't know. Maybe it was just, bear market stuff.
I don't know, like a whole decade there. Anyway, thought that was fun. Typically, you see Lowe's trade in sympathy with Home Depot. I don't think Lowe's reported yet. I think they're later on. So, Lowe's is up trading with Home Depot this morning. And without further ado, let's bring on today's guest, shall we? We have Bill Kelleher here,
Bill Kelleher in the house,
co-chief investment officer and chief operating officer of ETF Concepts. He is joining us without power. He's joining us from his phone. So I hope this goes well. We'll find out.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, guys.
Mr. Bill Kelleher.
How we doing? I hope you can see me okay. How we looking? This is crazy.
Actually, this looks quite nice.
Actually, where are you? That does look nice.
This is natural lighting. So, and I've lived in the city. I'm in Boston. Lived downtown for, like 25 years. I can't remember ever losing the power. I woke up this morning, psyched for the show, and like nothing's working. I'm like, what is going on? So I apologize, and it could come on any second. I called the power company, and they're like, yeah, it should be on by 9. And I'm like, great, perfect timing, right in the middle of the show.
Listen, Bill. When we're all like paying things with Bitcoin and everything, if we lose power, we're all broke. Like, is that what happens?
Well, this is a crazy thing, right, JC? I have this fancy like backup power supply from APC, right? I went and grabbed that thing. Do you think that thing? Do you think I even know how to use it? I'm like, what buttons am I hitting? It was
I have one of those. I haven't taken it out of the box yet.
Yeah, right. Today was the day I was going to use it too. I unplugged it. I mean, it was plugged in and everything, and I'm hitting buttons and like nothing's working.
But now that you learned your lesson, you're going to actually plug it in, which is equivalent to buying put options after the correction.
Right? Yeah, exactly. Right. I mean, I had the insurance, and it's probably like insurance companies, though. Like a lot of times, like when you actually need them, right? They're kind it's a fight.
Classic human behavior, Bill. Right?
I know. Hey, and so obviously a little bit rattled this morning, but psyched to be on the show. But what a great time for technicals, right? I mean, when you think about this, these markets,
as opposed to what, Bill? All those other times when it's not like. What do you mean?
Listen, it's obviously technicals are a huge part. I mean, obviously in my process, it's 100%. It's virtually 100% currently. But as a huge part of the market. But think about what we just went through over the last year and a half. I think about markets love narratives, right? And obviously we're in the interest rate cycle, which probably ended from the early 80s, up until the bottom a year ago. But if you think about a good parallel to that, right? With I look at mortgages, right? Because it touches so many, touches everybody, every American for the most part. Or a good percentage of them. And we went from a peak at about, thinking about 2000 at the end of the last bubble. And I remember this because I got my first mortgage was about 8.25, right? And they bottomed about 2 years ago, just sub 3. It took 20 years to go from 8.25 down to a low, which to break that 3% level, and then we undercut it for a short time period. But then think about the other side of it. It only took about a year and a half to retrace that whole move. I mean, so my point is going forward, right? The cycles, we're in a different cycle, and fundamentals the game's changed a little bit, right? So what technicals do really, really well is tell you what's happening now, right? What is currently happening?
Yeah, because these fundamental people, they're thinking a lot about what should happen. What might happen, what could happen. I'm interested in what's actually happening, right? Like I don't care what you think the market should be doing. I don't care what your fundamental analysis tells you. Your fundamental analysis is irrelevant. It's only the market's opinion of those fundamentals that actually matters, right? You feel me? Like that's how
100%. Yeah, the market's always right. It's fact. Price is fact, right? And the market usually makes the crowd pay, the herd pay. A great example of this was coming out of the financial crisis, when on the other side of this, when we were so aggressive cutting rates and quantitative easing, fundamentally, everyone, the consensus was we're going to create massive inflation, and this is going to be really, really bad. And it took 10 years of even we weren't even tipping the iceberg at that point back in 2013, right?
That's when gold had peaked.
Yeah, that's when gold peaked, right? So so we've got to look to the markets, and so I think last time I was on the show was July, and thinking about narratives, and so personally. Again, our work is a lot of tactical market timing, and again, so obviously technical analysis. Our models are built on price. And
Kelleher, I was told that you can't time the markets, right? That's what I was told.
Well, that's yes, and it's funny, but people have a misunderstanding of what timing the markets are, right? Because most people, when they think about timing the markets, are like calling tops or calling bottoms, right? And that's as I love to say is like. One of my mentors, Frank Teixeira, would say, I mean, that's sexy, right? You want to call the top. You want to be on record of like calling the top and calling the bottom. It's actually, market timing is actually just Moneyball. It's just probability. It's just getting the odds on your side, right? And so it's really more of probability. The idea is really just to buy when the probability is greatest that the market's going to advance. and sell or short when the probability is greatest that the market's going to move lower.
And where are probabilities? Where are probabilities currently?
Well, it's interesting. So what? And again, it depends on your time frame, right? So so what we've done is we've layered multiple time frames. So our system runs over 3 different time frames, and it's not a high frequency system. Like our system, our shortest term system runs about 2 weeks, right? And our longer term system is about you can think of about it more as a monthly. And so actually you can more think about the great part about our those 2 systems. Our third system is our regime based, right? Because that's our probability. Our definition. Are we in a bull market or bear market? And you'll love this too, JC, because we build it off of demand, right? Because if you think, what moves price, JC?
Well,
supply and
demand dynamics, right?
Supply and demand, right? Supply is fixed. So really what you have to be good at is quantifying demand. And so that's what our systems have built. And so we're in a perfect setup for market timing now, because in higher volatility regimes, which we are moving into. I know the VIX says we're in we've sold off quite a bit, but if you think about more the environment, and again, going back to some of those narratives and thinking about what markets do in rising rate environments. If you actually go back and look at the data, the market really likes price stability. So the 2 narratives right now going forward are going to be obviously watching the 10-year or watching yields and watching CPI or inflation, right? And so we had a nice little pop over the last year because we've seen inflation come down, markets like that, right? But the other side of it is, we've been doing it by aggressively raising rates, and that's going to cause that's not. We got to a level now, and it's not going to be a clear move right to back to 2% inflation and price stability. It's going to be, there's going to be because the other side of it is we have to balance out how aggressive the Fed stays, right? So it's that yin and yang a little bit, which going forward is going to create more volatility in the market, and it's going to be much better for market timing, right? And so. So we're in a sweet spot right now, and again, on the other side of that, it's great for technicals, right? Market timing is heavy on the technicals, and we believe this market is going to move into a time period where technicals are going to be an important part of the process.
What do you think is?
Go ahead,
Strazza. Yeah, what do you think is more important, Bill? Rates, talking a lot about rates, or the dollar from an intermarket standpoint?
They're moving together, Strazza.
Yeah.
Yeah, it's interesting. I mean, obviously, I think the dollar is more of a global phenomenon right now, right? Or just to tell on that, right? We're looking at, look, we're making all-time highs against the yen, right? And the yen weakness. So I think that's just showing us that it depends on how you look at the dollar. If you look at it as potential, stress in major markets, that's going to have repercussions for the market down the road. And again, we don't know, like you never see the bus, you never get hit by the bus you see coming, right? But there's some tells out there. And that's, again, what technicals are good for hey, let's keep an eye on this relationship. Obviously China is much more opaque, but, is probably part of the reason, or a major part of the reason why, a lot of the other APAC areas are under stress, right? So it bears watching. I think for our markets right now, obviously rates are going to be the driving narrative. Again, the bulk of the money, with home bias, or the bulk of the money being invested in U.S. companies is going to be focused on what's happening here in the U.S. and what's happening with our rates market.
What are the sectors? So we're in a bull market. Stocks are going to rip. Dow 55, Dow 50,000, S&P 5,500, right? All these things. So in an environment like that, tech mathematically has to be part of that equation, right?
Yeah, I mean, for me right now, like I'm thinking you've got to be, I know. Hey, listen, I know. Again, you're talking to someone who does a lot of market timing, but I really think you've got to shorten your time horizon. I know that's anti investing 101, but I think now is the time that you want to be more cautious, right? We just had one of the greatest bull markets across the board, over the last 10 years, and it was a stealth bull market. I mean, that was like the hardest market probably, unless you were a trend follower or a technician a lot of those years to stay in, a lot of in a lot of things that were working,
particularly in the United States.
Yeah, here in the United States, right? So, hey, and again, hey, the everything right now, like breadth is narrow, but it's kind of one of those tough. We're still in one of those tough markets, but you got to participate, right? But you also have to shrink your time horizon, raise a little bit of cash, because we are closer to. The markets are telling us there's been a major cycle change, right? And we don't know how this is going to play out yet. So you should be a little bit cautious. So even at these higher levels here, we're close to some breakouts on the S&P, but obviously with the Magnificent 7 or 8 or whatnot, but we still have a tremendous, 60% of stocks are still below their 200-day moving average. So we need to see some better repair there on breadth. But there's obviously good patterns out there. I mean, how about Microsoft making a new all-time high the other day, right? In this type of environment. And so one thing about history in rising rate environments, the other side of it is we do have to be careful about PEs, right? PEs typically contract. That's the fluffy part of fundamental analysis, right? When you start putting multiples on stocks and whatnot. Again, that's just as I'm preaching to the choir here, but that's why focusing on, or having some part of your process focusing on price is so important, and especially in these environments where we're really not where some of these lags, there are going to be lags. Just think about housing in general. What's that going to do for how aggressively rates have risen, mortgages have risen? Like, that's going to take some time to play out. So we do have to be cautious here. Moving forward, and to shrink your time.
So you think that the solution, or sort of the execution of quote unquote being cautious, is to shorten your time horizon?
Yeah, I think there's more tactical products out there too. I think it's a really small part, but there are some that are doing it well. We're seeing a lot more technical products. I think a lot of the tactical products that are out there now are more rotational. So as you said, you're like, oh, what sectors do you like right now? Right. I mean, there are some products out there for individual investors too, that can start to get some more exposure. I mean, obviously, using the major indexes or major sectors, you can get some exposure and, participate, but, move in and out quite easily. That's the great thing about ETFs. That's why, we've built a lot of our systems. A lot of our systems weren't really investable 20 years ago, which is kind of crazy to think about, right? There just wasn't enough liquidity in ETFs to run like a daily tactical market timing strategy. And to your point, was probably why, there was a lot of people that have tried market timing over the years, right? In individual stocks and there are a few that done it well. Marty Zweig was one of the best, I also encourage it too, because he actually invested in the 80s. So I'm looking at some of his work right now. He had a close relationship with Ned Davis. Ned Davis was really his technician. Although
imagine Kelleher having a few pops with those two. Come on.
Right. And you go back and look at some of their work. A lot of it was focused around interest rates, right? Because he was early to mid 80s at the time when we were raising rates raising rates in a raising rate environment, and of course leading up to the 87 bubble and then 87 crash, and Marty Zweig timed that very well and was legendary. So point is, I've been looking at some now that we've really had a really violent quick change, and to go back to your question earlier, I think it's the rate environment right now. How is that going to, and the narrative's going to change. Like, everyone's focused on the 10-year right now. I guarantee you in probably 6 months or a year, it's going to be jobs again, right? Because we're going to be focused on, are we tipping into are we potentially tipping into a recession?
We're always tipping into a recession, Kyle. Right? You know how this works. It's always a recession.
Markets love narratives, right?
Like, even when we're in a recession, they're already telling us that we're going to go into another, like the double dip. You know how they do that thing, the double dip, JC. All right, double dip.
I think the inflation one's going to die, right? Because because we're so aggressive on we're so for the moment, anyways, just because of housing, right? I've got to imagine that housing is such a major component of CPI and rents, and that there's going to be a lag into that effect, and so I imagine that the narrative is going to shift pretty quickly back to the to the jobs and the recession.
Cars too, right? Housing and autos, I think, are like more than 50% of CPI.
Right. Yeah. Yeah.
Be hard.
And if you take a look at, if you do take a look at any of the relationships, I know they're backward looking, right? And it's always different this time, but, the market really likes price stability, and we're getting close. I've got to imagine we're going to get close to that. Now, once housing starts to, once the wild card is there's just no supply right now, right? In the housing side. So prices are kind of staying up, but I've got to imagine that that's going to continue to put some downward pressure on CPI.
Well, I guess we'll see. We'll see, because if we're getting downside pressure on this CPI thing, stocks seem to like that, no?
Yeah, they like that. Exactly. And that's the other side of it.
Remember, Kelleher, our entire career until recently, it was the opposite. Inflation, the market liked inflation, right? Remember the old days?
Yeah, it's and so that's why it's important, like these cycles, especially when when we're just at a major inflection point, like I think like we were in the last 2 years, right? And so and it goes back to what I said earlier, is like it's a time where we really have to focus on our tools, right? And on the tools that on looking at price and looking at different indicators that might give us. Going to give us these leading indicators of where the market might go. It's just another tool in your process. So
it's the tool.
The tool. That's right, JC. I love it. I love it when I talk to the technical guys, because I don't have to kind of, when I go out and talk on market time and JC, the conversation has to be quite different. I have to temper down a little bit because you're
old school. I don't give a fuck, right? So like if you think I'm crazy, that's your problem, right? Like I get it. Like Ralph Acampora and like these guys, they tell the stories about how, like back in the day, they would do their technical analysis and then they would go talk to their fundamental friends to help them create the story, so that when they had meetings with their clients, they had a story to tell, right? Like that's real.
They'd have to change their language. They would have to. They would take their technical.
I won't do it. Kelleher. I'm not going to do it.
Take their technical processes.
I'm not going to do it.
They kind of fool the street a little bit by using fundamental words.
I'm not going to do it. I'm going to keep it real, Kelleher. I'm going to keep it real, man. Somebody's got to.
Right. Somebody's got to. That's right, JC.
Tell him, Strazza. All right, Kelleher. Listen, it was lovely. Boston, a secondary city in this country outside of New York, right?
A lot of CMTs hanging out in Boston. Right?
So many.
Few people know this though. Great fundamental shop. Obviously, Fidelity was like the first. Was like, as I know, in probably in the U.S. maybe the first major chart room was here in Boston. So
that chart room, that Fidelity chart room, is so sick, like crazy.
I every now and then I'll call just to see if I can meet one of the analysts over there, just to refresh my brain, JC. There's so much in there and so many.
I haven't been there in over a decade, so maybe I'll meet you there. How about that?
I'll tell you, because if you have some biases, all you have to do is walk in there, right? We all end up developing some of these biases sometimes in our head.
Dude, the best chart is the one that's got it's on the wall, and
I know
they
one
have
you
all the
say.
magazine covers.
Let me guess, JC. Let me guess.
What?
The magazine cover.
Dude, it's so good. It's
so good, right?
It's so good.
It's unbelievable. Massive.
What technician or team of technicians gets the credit for building out this awesome chart room? Like who did?
Actually, it was the founder. It was Ned Johnson. He actually was a lawyer by trade. He bought Fidelity. He was a lawyer, and he acquired or bought Fidelity to manage, to also manage some of the assets. But it was more of a hobby. That was his secondary, and he was a chartist.
Dude, this room is so good. Why don't we have like an event in that room? Can we do that?
We've done some small ones here in JC, Boston CMT Association chapter. We've had a few. They've hosted
in the room, in that room.
Well, we've done cocktails in the room, and then had a proper lecture.
Dude, set it up. Set it up. Let's do it.
I know, right?
Let's set it up. Do it.
All right.
I'm in. Do it.
Love it.
All right.
All right.
Nice.
Thanks a lot, Bill.
Thanks, guys.
Thanks, Bill.
See ya.
All right.
Dude, this room is
I've
no
never
joke.
seen the room in person. I've been told about it by JC and many others, but I've never been there. So
I did a blog post about it like in 2011. You could find it somewhere. Business Insider picked it up. It was like a whole thing.
Yeah.
And I took pictures like in that room. It's huge. It's this massive room. It's sick.
I haven't been to Boston in like 10 years. I used to go all the time. I love Boston. It's been a long time though.
It's not New York.
That I was thinking too about what you were saying before. That right there is just good advice to a college kid too, right? Live in New York for a while.
Yeah.
No?
Yeah.
Yeah. Or live.
Aren't you the one who told Louis not to live in? Didn't you tell Louis not to live in New York?
I don't think he needs to. I think he's special situation. As general advice, I think living like I lived in Stamford, Greenwich area, so I was a 40-minute train ride from the city if I needed to go in for anything. I even worked in the city and did that commute for a while. It's just good to be close enough because there's a lot of action there and a lot of opportunities, especially when you're young. You could spend 5 years there, make your connections, take advantage of the opportunities that the city offers, and then go somewhere else. But I think it's a great starting point.
By the way, we're getting some questions. Jonathan is mentioning we're having on Wednesday, December the 6th, if you are in New York City area, on Wednesday, December the 6th, having an event downtown held by the CMT Association. We'll have a registration link soon. I get CC'd in all the emails with Jay Woods and Tyler and them. So it's going to be a good time. It's going to be a happy hour afterwards.
Not to be confused with our event in January for members of the Portfolio Accelerator Program. When I have a link for that, I will share that as well. But that'll be a much more exclusive event.
Yes, this is an open event held by the CMT Association.
Right.
Free drinks. So I'm in.
Sure. Okay. Speaking of Business Insider, actually, JC, I saw they had some news today. Henry Blodgett is stepping down as CEO.
Long time coming.
I didn't know he was still the CEO.
And they're rebranding. They're rebranding back to their old brand, Business Insider, which is not what it was called.
Cluster stock.
In the journal, the article kind of basically said they're rebranding back to their old brand that everyone still considered the brand, right? Like you could rename yourself Insider, but if people are still calling you Business Insider, you might as well just go back.
You might as well just be yeah. Anyway, fun story. Okay, a couple more things on my radar here, just as far as news flow or tickers or whatever. What's going on today? We had what's up today? I haven't talked about this for a while. Snapchat is trading higher. What is it up now? Actually, I haven't looked for a minute. When I looked, it was around 5%. Amazon is going to run ads on Snapchat during the holiday season and beyond. So, hey, advertising revenue, good for Snapchat. So, and affiliate revenue, all that stuff.
Snapchat is one of those companies for me. It's like precious metals. I don't think about it.
Yeah, me neither. I sort of stopped. I stopped thinking about it for a long time.
When you said that, I was like, did they get acquired?
No, they didn't. So this is the first time I thought about Snapchat in quite a while, especially since I stopped using it. So anyway, I thought that was interesting because, again, not a stock on my radar normally. We did have a couple other earnings. None of them super interesting, though. XP, Logistics. We had CSIQ getting wrecked here this morning. SE, on VIPs. Nothing super interesting on the or just Home Depot today, really. We're sort of at the tail end of the earnings season. So
I'm excited for after the show today. I'm going to go listen to the replay of DraftKings Investor Day presentation. Took a look.
Aren't Investor Day presentations like hours long?
Mm-hmm.
I've never. I don't have time for that. All right, tell me how it is.
I went to a shareholders meeting once, and the CEO literally said to everybody in the audience, journalists, shareholders, the whole thing, if you only own the stock because you think it's going to go up, I don't want you to own the stock.
And then everybody clapped.
And that was the all-time, that it never went back to that price. This was 15 years ago. It just crashed and never went back.
No, but that's what you're supposed to say. You're supposed to say, I own this stock. You're supposed to respond with, yes, I own this stock because I believe in the company and I believe in you and everything, right? That's what they want to hear. That's what they want to hear.
They want you to be in it for the ESG.
And that.
So anyway, one interesting thing that I just, pulled out, combing through here real quick, was that, they're entering one state at a time, DraftKings. And in the earliest states that they entered years ago, it took about 11 quarters for them to turn profitable in those markets. Now they're projecting that in the new states they enter, like 4, maybe 5 quarters, so about a year. And that's because their customer acquisition cost has just plummeted as they're scaling and growing. So
that's great, because that was always like the biggest knock on one of the big knocks on them was they have to advertise out the ass just to get it's the only way to acquire customers. It's very expensive, right? Yep. So I guess the fact that that's coming down is obviously a good thing, but especially when that was the biggest knock against them.
We see all the things we've talked about on here about them since this summer. Like, we continue to see more and more like news kind of come in that just indicates that whatever they're doing is really working, right? Fundamentally. So
can we talk about something funny?
Yeah.
Talk about something funny.
Yeah.
So I hope you guys are paying attention, and not the two of you, but like people out there listening. I hope you're paying attention. We literally just saw the biggest bond market crash in almost all of our lives. Definitely mine and Strazza and Spencer and almost all investors except the very, very old investors, like the oldest ones, right? But like almost everybody else, this is the biggest bond market crash we've ever seen. Then on Friday, Moody's decides to threaten to downgrade the debt, right? Like the bonds, right? After the collapse. And on news of the downgrading of the debt, bonds are rallying harder than ever.
Actually, there's another Moody's headline today, JC. Do you want to hear it?
Knock yourself out.
All right, Moody's following up on their U.S. debt downgrade. They put out some cautious commentary on the biggest U.S. banks as a result, or subsidiaries of the biggest.
Have they not lost all credibility? Like, do they actually move the market in a meaningful way?
Like, are you watching this?
Don't shoot the messenger, please.
Nobody cares about a Moody's credit rating anymore. Like, everybody's well aware of the issues.
All right, ready?
What?
I will see your nobody cares, and I will raise you a secular uptrend in Moody's stock.
Oh shoot!
Yeah,
wait,
it's amazing. Totally.
It's got S&P Global, same thing.
Yeah.
Good.
Because they're one of these protected, regulated industries, right? Where they provide a service that is government mandated, and they're in bed with all the agencies and all the right people in Wall Street. These ratings.
And there's only 3 companies, and there's only 3 companies that exist in the whole space.
So my point is, I hope
2 of them
y'all are paying attention. You're seeing this is like the shit show, like this puppet show. Like, I hope you guys are watching. Like, people are like, "Oh, JC, why do you have to be such an asshole?" Like, what, it's not about me being an asshole. Like, I'm pointing. Like, look what's happening. You can't make this shit up.
SPGI also, we just wrote about this one like last week, monster base here. And yes, when you zoom out, these are secular leaders, particularly in their space, right? They're in data, information services, right? Market data kind of space. Not the easiest. Thomson Reuters looks great too. Look at Thomson Reuters. People don't know though, that's a holding company with just so many diverse businesses. Thomson Reuters is a massive company. And they own things from.
Yeah, these rating things are probably like a loss leader, right?
I have no idea.
No,
I know.
No, certainly not.
No?
For Thomson Reuters, the loss leader is Reuters.
Yeah, be the media company, but then
the media is the loss leader. The other stuff is where they make their money.
Like Bloomberg, right? Like Bloomberg, they lose money on everything, but it doesn't matter because they crush it with the terminals.
Yeah, and also I'll bet Bloomberg has like just so many private investments too that we just don't know about. Thomson Reuters, I know for a fact they have digital exchanges, digital brokerages, like they touch the money and do real financial things.
Oh, didn't they just buy? Didn't they just buy an exchange? What that?
TradeWeb. So TradeWeb is a big subsidiary of theirs.
Maybe that was something else. Yeah. Okay. Yeah. All right. Cool. No, that's a very good point, JC, though, about that. You're right. I hadn't looked at TLT really since Monday. Since
also
Friday,
something else
really.
to point out: these massive tops, quote unquote tops in Disney, in 3M.
Why are you quote unquoting? Why are you the potential tops?
Yeah, that's why I'm quote unquoting, because we don't know if they're tops or not. But these things that look like tops,
yeah,
how are they acting?
Dude, breakdowns have not been materializing in the case.
But
still the case.
But I think it stands out more in these massive tops, right? No, like these massive tops are not completing. Like that's information.
ADM, right? Tyson.
Yep, exactly.
I know the tops you're talking about. Listen, some of them have gone. We have had some good shorts this year on some patterns that look like this. But on balance, yes, the breakdowns, we're just not getting them. It's been a tough tape all year because you could say the same thing about breakouts, right? Like the best looking charts ran right back to their old highs at the breakout levels this summer, and we're just failing one by one, right? So we're seeing it in both directions. And when you take a step back and think about it, it's like, oh yeah, it's a messy market. You know, it's a range-bound market.
Yep.
Very
so that's very characteristic of that.
Hey, you guys want to talk about trends? You want to talk about crypto? I got some stuff.
Wait, we had a chart of the U.S. versus the world.
Yeah,
making new, or the world versus the U.S. making new.
It goes
lows.
straight down, Spencer. We all know what it looks like.
I want to kick a question over to JC about this one. So,
please,
this trend, nothing new. I mused on Twitter yesterday that this may very well be the greatest pairs trade in financial history, at least in my career. Long U.S., short the world. It has worked for a long time and has worked in a big way for a long time. If you look at some of these international indexes, they simply don't look like U.S. stock market averages.
Yeah, but explain why.
Well, I'm going to ask you why, because a friend of the show, Mr. Julius DeCamp, I thought made a great point on Twitter in response. Don't go looking at it. What
am I looking at?
So, question for you. Yes, this is due to, I think, a couple major factors. Throw up the growth value relationship with this. Should be the next chart or the chart after. Aha. Okay. So growth has outperformed value, or shown here, value has underperformed growth consistently during this reign of U.S. leadership. In other words, a lot of this simply has come down to the fact that the biggest tech stocks or biggest growth stocks that drive the denominator, in this case, the S&P 500, are these massive tech stocks that have been leading forever, it seems, right? So that drives a ratio like this. It might drive something like large versus small caps. But somebody made a good point on Twitter. Julius, next chart, the euro. There's also a dollar component here, right? There's definitely a currency component. So which one do you think explains this relationship, or this, just sustained underperformance from ex-US stocks better? Is it the strong dollar, right? Skewing that or tipping that performance in favor of the U.S. because these are U.S. denominated international indexes that we're using, in this case, all country world? Or is it the growth versus value trend, or is it a little bit of both?
It's probably both, but it's definitely the growth versus value.
Can we say like 75% tech, 25% dollar?
No.
No. 80, 20, 90, 10? I don't know.
The overlay is a lot cleaner with growth versus value. Yes, there's always going to be a currency component, when we're looking at these US dollar denominated international indexes, and that, currency component has favored the way the relationship has gone in favor of the US. But growth over value has just been such a dominant trend in so many relationships that we look at. So much of the intermarket stuff that we look at, we take a step back and say, isn't that just a big cap tech thing? Isn't that just a growth over everything thing? So I would agree. It's more growth versus value. Yeah.
Yeah, these countries just don't have it. I mean, just go country by country. I know you have, and I certainly have, but go country by country and look at the components. You know what you're going to find? A lot of these countries actually have a 0% weighting in technology. You know, the United States has so much technology that they need to take stocks out of the technology index and invent new ones just to put technology stocks in there. That's how much technology the United States has.
You know, having the best stocks really helps if you're going to passively invest in your home country. It's nice to have the best stocks. So don't take it for granted, people. It might not always be that way.
But it hasn't always been that way, right?
Been that way for about 15 years. So a lot of people simply don't know a world where that hasn't been the trend on relative terms.
Yeah,
right?
I have no idea.
Right.
I have no.
I'm with you. I know in the past it's been different. We've seen world over US. We've seen value over growth. But going on 2 decades now, these trends have been moving aggressively in one direction. So trend reversal there eventually might confuse some people, catch some folks off guard. So.
Just a quick rundown. Dow futures up 360 points, up 1%. S&P's up 65 handles, about 1.5%. Nasdaq futures up almost 2%, 280 points. Bond futures ripping, 30-year up 2%. Gold up 1%. Silver up 3%. Copper up 1%. Oil up 1%. And euro ripping, yen ripping, and the dollar getting the crap kicked out of it. With interest rates lower and the volatility index down to 14. I'm not sure if we actually hit a 13 handle on the VIX, but new lows on VIX. By the way, credit spreads, high yield credit spreads, as tight as they've been all year, bro.
I was just looking at that. It looks like you're going to get new highs and like kind of a resolution of a range here.
Does that usually come with lower stock prices or higher stock prices?
You know what the chart looks like. So
I do.
Wait, does that mean we're close to uninverting?
No, we're talking about credit spreads, not yield
credit spreads, not treasury spreads. But we often overlay a chart. We use HYG IEI. That's, I guess, maybe a lazy way to look at the inverse of credit spreads, but it's pretty damn.
It's not lazy. It's easy.
Yeah, it's not lazy. It's good information. But we overlay that with the chart of the S&P 500 and look for confirmation there, because those two charts, if you zoom out forever, look very much like one another.
So when these assholes were crying about a credit crisis and the recession and the market crash in October, right, which is a perfectly normal time for stocks to correct and bottom, by the way, and they did, they were just, stocks were making new lows. Individual stocks stopped making new lows, right? And also credit spreads were getting tighter, not widening, right? So when all these people were crying on Twitter, like if they would just like look at what prices of assets are doing, right? They're so busy being angry about weak breath that they didn't even take the time to actually count. Like they're just so busy being angry about weak breath. Like they're not even counting. Like, why can't you just count? Like, what is the matter with people?
Because there's different ways to measure because you can look at price performance, but you can also look at like earning contribution of earnings.
That's like taking Ozempic because you're too fat and lazy to exercise, right?
No, but
it's the same thing. Like you're gonna use some half-ass indicator instead of just actually doing the work and counting.
No, I'm saying some fundamentally minded people will look at just a breakdown of the S&P 500 earnings and where it comes from, and say, oh, the top 5 are some ungodly percentage of earnings in the S&P 500, right?
That's dumb, but what does that have to do with the price of assets?
Well, I'm saying there's different ways to like look at breadth in that way, right? So that's what other.
Yeah, but if you're looking at the earnings of stock companies, you're not even looking at breadth.
The people that you're
what do earnings have anything to do with breadth?
Stop. But the people that you're talking about, JC, it's not just breadth, right? They'll point to anything to complain, and the problem with that is that these are typically perma bears or these macro people, and the problem with what they do is that to have a bearish narrative or a bearish viewpoint, that lends itself to a dogmatic approach where you're betting on the collapse of a currency or a debt crisis, right? Or something with our government or a war, right? And that tends to be like a long-term thing. And then you get stuck there and you start betting on bad things to happen, right? And you just want to point to the bad breath or point to this. Or the stocks went up. It was because of the Fed. It wasn't real. Like there's always something. So Those are the people you want to mute on Twitter, and you're usually pretty good at that.
I like this comment from Echo Delta. Shoot, what was it? Oh yeah, they always say the most dangerous words in finance are "this time it's different." I would argue equally as dangerous are the words "this won't end well." Right? People always say this won't end well. Right?
But it never ends well by definition.
The implication that that whatever there's 5 or 7 companies that are dominating the market. This one can't end well, but it usually goes okay most of the time by definition. So let's do a hot corner quickly, and then can we bring on
big transaction on Square? What happened there?
And then let's bring on Patrick here because we got some stuff to talk about. All right.
Hot corner. So hot right now.
Big deal, Strazza. What do you think? What happened? Talk to me.
So this guy, Rolaf Botha.
I was going to ask you to pronounce that, please. Yeah.
Rolaf. South African. Sequoia Capital. Right. So this is Sequoia. You've heard of them. They make investments without doing any due diligence, apparently. Maybe that's what they're doing because it seems like nobody looked at this.
Wow, man.
What? Too soon? Too soon? So 27.5 million, not nothing. But when you're Sequoia, I would say, JC, this is a piker purchase.
Maybe.
How many billions did they give Sam Bankman locked up?
Quite a lot.
How many what?
Yeah. Was Sequoia the one that did that published that infamous interview with him? I think it was.
They were drinking the Kool-Aid.
They published a very infamous screed about FTX and Sam and how much of a genius he was that they took down.
It was a fine example of the herd mentality that we see over and over and over again with either bubbles or frauds or anything stupid like this. You could say the same thing about Theranos, right? Everybody was just so excited, and smart people, whether it's Bill Gates or whoever are involved, they just wanted to be involved, right? Without doing their homework. That's what happened with SPF, and every new VC that got on board, the other ones had more and more FOMO, and that was it. And
yeah. Okay, so anyway, back to the table here.
Yeah, what about this oil and gas stock, Tallow? It's a big 21 million.
Yeah, who are this? Must be a sovereign wealth fund. Let's see.
Control de empresa de capital.
Safe assumption.
Let's see.
I believe that is Spanish.
Yeah, how many?
I can't read this because the Google's returning me answers in Spanish, JC. But I believe this is sovereign wealth.
Well, it's not my fault that you only speak one language, all right? That sounds like a personal problem.
Isn't there a way to translate this?
Hold on. Can we move?
Dude, there should be a pop-up on the page, man, from Google saying, do you want to translate this page?
Hold on. What about the CEO and chairman of Air Products dropping $3 million?
Yeah, that stands out. APD, one of the bigger materials companies, too.
Yeah, they are.
Chart looks, this is where insiders buy, though, right? This thing got absolutely murdered on earnings about a week ago. Big down day, lost about 13%. Clawing it back, but still a monster gap to kind of eventually try and fill and reclaim here around 275.
Yeah, but this looks a lot like, a lot of charts that kind of ran into those highs in 21 and are still in that range. This is a bellwether.
Big mess. Been a mess for 3 years now. But yeah, when this range eventually resolves, you are right. It's a bellwether, long-term leader. It's one that you would want to be involved in on a range resolution. But insiders just doing what insiders do, right? Buying this weakness.
From a little town called Allentown, Pennsylvania, home of the Lehigh Valley Phantoms minor league hockey team.
Who are we talking about now?
Air Products.
No kidding. Wow. Hey, look at that.
Little place called Allentown.
Reminds me of Billy Joel.
All right. The song was supposed to be about Bethlehem, but it didn't rhyme.
You taught me that.
Yeah, when you listen to the words, he's actually talking about Bethlehem.
Do you just like learning about towns where you live?
I like maps. I don't know what to tell you.
There's some rich history. There's some rich Dow history in JC's backyard, so he loves
true.
That's true. That's
A
definitely
lot of
true.
fun facts.
Hey, listen, you and I, we're not so different, right? I had a former Dow bellwether in my backyard too. But
I have a current Dow bellwether in my backyard.
You live in New Jersey. Like, you have a lot of companies by
in
you.
New Jersey.
Yeah.
What? Waste Management's in Miami. What are you talking about?
I'm talking about Johnson & Johnson.
Oh.
Dude, you have so many companies in your backyard. It's a joke.
Also, UNH is almost certainly headquartered in New Jersey. Almost certainly. Anyway, moving on. Okay, we got Patrick here. Pat, you ready?
United Healthcare is based in Minnesota.
Really? Oh, I would have guessed Jersey for sure. Well, Jersey has Pfizer. All right, I'm bringing Patrick on.
Bring him, Pat.
Fellas,
Patty.
how we doing?
Pat, you look bright and bushy tail this morning.
Pat is a good example of what we were talking about before. Pat, I was telling everybody, I was like, what an advantage, I had. And, obviously you're another good example of living in New York City, being in this place, meeting all the people that we met. Pat, like, people talk about how, like, JC has a lot of connections. Pat's Rolodex is crazy. Because Pat was just always around.
Yes.
Like, people are like, oh, how do you know Pat? I'm like,
he's just there.
How do you know? No, he's just always around.
No, but I would completely agree. It was such an advantage living there, and just being able to have access to people when you want to. I mean, that's huge.
Yeah. We had some good times in New York City. Not
sure
long
did.
ago. I was thinking about Pat and the old Chart Report WeWork office when WeWork had to sadly declare bankruptcy a few weeks ago. What
do you think about that? You think Adam Newman will buy it back?
They should turn them into like paintball like courses. How fun would that be?
Laser tag.
Yeah, laser tag or something. Yeah, that's cool.
Got some new company.
Like little kids' birthday parties or like adult stuff too. Like, I like laser
He's
tag.
got some new startup that's
How about
unprofitable.
How about this turnaround? Before I got on here, I was just checking. It was worst day for the dollar since I think last November, like a year.
It's almost like emerging market currency sniffed it out last month. Almost.
The title of Twitter Spaces today will be what I always want the title to be, but some people disagree with me. Turnaround Tuesday.
But what is
this? Yeah, it's appropriate for today. That's appropriate for
every Tuesday. We should just title it Turnaround Tuesday.
Technically, there is always something that's turning around.
Right.
Tuesday or otherwise.
It's got a nice jingle to it. The Turnaround Tuesday pod.
JC, you mentioned that thing about emerging market currencies, but like,
oh, stop.
Dollar didn't make it easy. It did look a little sketchy last week.
Dude, did you see the Polish zloty?
I did not see the Polish zloty.
Well, maybe you should. That Mexican peso, forget about it, man. I don't know. What's your beef with Poland?
So
no beef with Poland. I love pierogies.
Dude, I love a good pierogi.
Pat?
Good, they're so good. You got a lot of Polish people where you grew up. You grew up around pierogies.
Oh yeah, I got.
It looks like Pat hasn't eaten in a decade. But
what is the Polish things that the Italian people eat? Bialy? No, Bialy.
Oh, you can't get Bialys outside like Jersey, New York. I feel like that's like a New York thing.
Yes, but it's not Italian, even though they have it at a lot of the delis.
Yeah,
They're Polish. They're delicious. They're like a breakfast little treat. I'm a big pastry guy.
Anyway,
but I did have a keto breakfast this morning.
Dude, do you see this? You see this Mexican peso ripping? Dude, 1.2% this morning.
Ripping though? Ripping? That's the word?
Look at the Chilean peso up 2.3% this morning.
Said no one ever. Hey, Pat.
Look at the Polish zloty currently hitting new multi-month highs. Look at this thing. Polish zloty up 1.8%.
I'm not going to look at the Polish.
Look at the South African rand up almost 2%.
That one I actually
look at. How about real estate? Look at real estate today. I mean, we saw a little bit of a failed breakout starting and a failed breakdown. I'm sorry. And then, wow, You know, it's up like 4% today.
Biggest day in a year.
Really? For real estate?
Are we thrusting?
I think that Strazza just wants to say that word. Look at real estate, dude. 4.3% on the IYR real estate ETF.
Biggest day in the year. More importantly, though, small caps coming off 2 monster days last week. Just go look at those gaps in the IWM chart. This biggest single day gain for the small cap Russell 2000 since November 10th. That is a year, folks. That's also right around when stocks bottomed this time last year.
You know, it wasn't a bad week last week, but my one gripe, if I could be picky, the one thing you didn't see last week was follow through from small caps. So, if they can redeem themselves this week, that would be huge, but they kind of need to, right?
Yeah, but what you did see last week? You saw financials.
But
look at regional banks today, up almost 6% on the regional bank.
Financials were ripping. What was holding the small caps down?
The lack of insurance exposure.
Technology is gapping above its highs from December of 2021 right now.
I'll tell you something right now. Strazza is so dead on. These gap and goes, I've said it a zillion times. You see it all the time. When you have very clear resistance and you gap above it, like you just jump over that hurdle.
Yeah.
I mean, gap and go here is extraordinary. And the risk versus reward is so clean because the trade is only on if we're above those former highs. It's not a gap and go if you're not going, right? So as long as you're going, it's a gap and go, and these gap and goes fucking go.
Yeah, I mean, you're describing a breakaway gap.
That's right.
And I've been using that phrase a lot lately, which I think is
now
also
itself. It's not even 10 o'clock. So relax your souls. But the potential for a breakaway gap is absolutely in the cards.
The technical risk on mornings like this is that you get a monster fade. And then these beautiful candles and beautiful breakaway gaps that we're talking about being so bullish now look kind of bearish come 4 o'clock, right? So long day. Let's see if they can hold it. But God, these initial moves, like look at the home builders. I mean, the gaps on these charts today.
You're seeing a lot of the old leaders kind of just coming back, like semis were pretty strong last week.
Yeah. So SMH looks amazing too. Looks just like XLK. But if you guys pull up ITB, that's that gap and go, that breakaway move that you're talking about. Wow. 5.6%, by far the biggest single session will be since that November 10th, same as small cap. So we're seeing if these moves hold, again, big asterisk for now, massive momentum thrusts, and
this would be a new all-time high, by the way, for Nvidia.
A key tech.
Hey now, what a move! I mean, it broke the neckline and has not closed lower since. All right, it was down like 18% when it broke that neckline. Broke it, hasn't closed lower since. 9-day winning streak, now 10, I guess.
It's up like 12 straight days.
And as JC said, we're there. We're pretty much
the Russell 2000 right now is up 4%.
Wait, I wanted to go to the chart report specifically for a chart from Scott Brown yesterday. Speaking of the small caps, right?
That was a great one.
Yeah, it's a little hard to see. I'll zoom in a little bit, maybe that might help. But
yeah. So he's saying there's a chance.
And there certainly wasn't there? Hey, but you guys worried about that?
Yeah, but he didn't say he would short it either, JC. There's a difference.
Well,
the stocks that I'm long are working so damn good. I'm not thinking about anything else. How about
that? Historically, a death cross is actually a good thing for stocks.
Yeah, So actually, when the Russell death crosses, that's the most bullish.
Dude, these people are such morons.
Historically, a death cross is nothing that any real technician even bothers to look at or talk about.
Yeah, but it's part of like sentiment. Like when these journalists who can't count are talking about one lagging indicator crossing over another lagging indicator, and that's why people should be scared. Like when all of that happens, think about it from a sentiment perspective. clearly it's time to do the exact opposite, right? You feel me?
Yeah, and Spence, if you go down one more, Ian had a really interesting breadth chart here. I thought this was kind of notable because, you know, you hear so much about this lack of breadth. And here he's pointing out that, like, hey, not too bad. First time we've seen this, you know, that many stocks making 8-week highs like that since 2020. I mean, for how bad breadth is, and I get it, you know, seeing that pronounced mega cap leadership last week and how bad small caps were, I get it, but there's a million ways to look at breadth.
And then think about it. When everybody's a breadth expert, like people who don't even know what technical analysis is are opining on market
Ian
breadth.
knows what he's
No,
saying.
I'm not talking about Ian. Ian obviously knows. I'm just saying, generally speaking, have you noticed that everyone's a breadth expert now?
True.
Interesting, right? Yeah,
Yeah,
not
there's
Ian.
information.
Ian's the opposite. Ian does know what breadth is, right? Yeah. No, I'm talking about kind of just generally speaking, like non-technicians, people who don't do this every day, like just random people are just like picking out stats like, oh, did you see the S&P 493? I'm like, what the fuck is the S&P 493? Like, that's not a thing. That's not an actual thing.
And Spencer, if you go up to John Kicklighter, that, you know, you guys were talking about gaps. Check out this one. I mean, this stat kind of caught my eye. So 10 consecutive bullish gaps in the S&P just ended, but one of the longest streaks since 2013. So, I mean, and to me, that says like institutional buying, chasing, whatever you want to call it.
It's Strazza? Is that thrusty?
It's thrusty.
I believe he's simply talking about the S&P 500 having a higher open than it's closed the day before.
Yeah.
Right.
Yeah.
Yeah.
But, you know, what do you think? Does that mean institutional buying? What does that say?
I don't necessarily think that it speaks to institutional buying. I think it's more thrusty, like, you know, like joking aside, like I think that's thrusty.
Bid,
you know,
you're seeing a very
keeping it thrusty.
There's been a relentless bid for the past 2.5
years. It's more evidence that we're seeing everywhere else, by the way, not just here, that people are buying stocks very aggressively at a time where historically they buy stocks very aggressively.
You're seeing a very chasey tape day in and day out, right? Where we're closing on the highs. Spencer's coming in here in the morning, be like, "Oh my God, did you see how we closed yesterday?" Like it's that kind of market. While it was the opposite, right? Since this summer, Frank Capillari does a lot of work on that. He's got the chart that's got all the circles and arrows on it, right? Where he talks about closing on the lows, closing on the lows, closing on lows. So these are things, as you pay attention to the tape day in and day out, that you pick up on, and you can measure them, right? Or visualize them in a number of different ways. Like Kicklighter, I think, just used a pretty interesting way to kind of illustrate that point. It's bullish tape.
Quick recess. I gotta go.
I was just looking for something to say to start the show. Dear Lord! All right, where's my recess bumper? I have to find it. There it is.
I don't.
Close call for your Miami Hurricanes last night. I know you didn't watch the game. I watched it for you. Pulled it out though against FIU.
What do you got, JC?
I don't get into the city often.
Yeah,
as much as I used to. So I couldn't decide if I wanted pizza or burgers. So I said, okay, we're gonna do both. 2 dinners. Yes. So we had Lombardi's at 6. Always good. First, institution, first pizza place in America, the whole thing. Fantastic, by the way. So good. And then around like 11, went to Corner Bistro for burgers.
Hey.
And it just brings a smile to my face, like those places saved my life, like when times were tough and, things were hard, like those places were like, right.
It is a pretty cheap burger for how good it is. It's like $5 or used to be $5. I don't know.
And you run into some interesting folks there late night.
It's a drunk burger. It's a drunk burger joint.
I've run into Dan Nathan at Burger Joint
I was with
multiple times. I was going to say multiple times I've run into him there.
So this also puts a smile on my face because what JC is describing, this is something that we call the dinner, right? So I actually...
man.
So I actually can be credited with inventing or coining the dinner. If you watch our documentary out in Asia, it's a phrase you'll hear a lot. Riley is mentioning it in the chat right now. But a lot of dinners, even some dinners. So,
Spencer thought I was kidding
Was that
last
4?
night. He thought I was joking.
Dinner.
oh no, this is not something we joke about at all.
Do you want to explain the dinner now, or save it for another time?
The dinner is real. What do you mean? It's when you can't decide and there's too many good options, like JC's saying. You know, he only gets to be in New York so often, and you gotta get 2 dinners instead of 1.
Mm-hmm.
Happens a lot. Happens all the time.
Yeah, it was great. No regrets. It was fantastic. All right, guys. Adios.
All right, we got to hop. Spaces at 11 o'clock. Chart request live, maybe 1 o'clock with JC. We'll find out.
I can do it today.
Oh,
no,
sweet.
I got it. I'm on TV. I'm doing TV
Steve,
today.
you want to do it?
All right.
I'm
Yeah,
on the
we'll see.
old basic cable later today.
All right. Catch you guys later. Go make some money. All right.
Adios.
Bye, guys.
Adios. Thanks.
I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, I can't take no loss. I don't even know